straight along to our next panel, ladies and gentlemen, on NextGen transaction banking, and I will welcome once more to the stage Chetan Parekh as moderator of this next session.
Thank you, Robin. So I'm back. Glad to host next generation of transaction banking. For those of you who are not from corporate banking, this is how wholesale and the corporate banks do business with their customer digitally. I have a very distinguished panelist waiting, so I'll just quickly get them on board. So my first panelist is Lasma Elliott. A very warm welcome, Lasma, to you. She is the former head of products for global transaction banking with Barclays. My next panelist is Anne. Anne is head of commercialization at global transaction banking at Lloyds. And last but not the least, Dom is my third panelist. Is the president at SAPA Global Payments and Schemes. Is an independent advisor to payment company. Very interesting last panel. A lot of different views around culture, banking, how ClearBank did it. Very, very interesting points. So we'll look at the other side of the banking, the wholesale, as the most difficult banking area. I don't think anybody of us thought 5 years, 7 years back that we can do digital opening of corporate relationship. Today, Tide has done it, thanks to ClearBank and many other infrastructure providers. There are very, very successful business banks globally. And it all comes once you onboard the customer. How do you differentiate and bring in their very complex corporate lending payments and trade transactions digitally and process them digitally? Yeah. So I'll start with reimagining. How do you see this next generation of transaction banking? So I'll start, and with you, how are the expectations changing when you've seen post-COVID with corporates and business banking customers in terms of what do they expect now from the digital on the corporate side?
No, thank you for having me, and I'm really glad that we're kickstarting this with a customer-centric lens. I mean, the previous panel finished on the customer aspect, but I think it's really important for us to frame the conversation in the context of how the current demographics are shaping customers' expectations before we go into SME or corporate expectations. So in the UK, it's important to note that now we have 35% of the UK population that is aged of less than 30 years old, effectively. They have been born with almost smartphone in hands, social media, WhatsApp, and just like they consume the Netflix experience, they expect their online shopping experience to be hyper-personalized. I think we touched upon this in the previous panel, to have speed and immediacy, and also choice when it comes to methods of payments. So having the ability to pay through cards, open banking, Apple Pay, or indeed embedded finance. And this is very much shaping how SMEs and corporates' expectations are growing themselves and how they can serve their end customers. If I think about SMEs as a starting point, for them, the transaction banking and treasury function is not a key focus, right? So they don't necessarily have the capacity or indeed the skill set to manage their daily transaction banking needs. So by offering off-the-shelf transaction banking solutions to their clients, as well as self-service, auto credit decisioning, instant servicing, banks can really bring a difference into SMEs by removing the daily noise of operation and leave them to focus on growing their business instead. And I see the use of Gen AI as a key building block for banks to power the services, but also grow new products. And this will be, obviously, with regulation in mind. We spoke a lot about regulation in the previous panel. Banks are heavily regulated, so this will remain a key focus for banks. Corporates, on the other hand, have more complex and international needs. And the strategic treasury management can be a competitive edge for them. So they will need to think about the efficiencies, automation, and cost holistically across their transaction banking needs. So be it liquidity, working capital, and risk management, this is something that they need to think about holistically. And when I think about the way the technology can support that, it's really through automation on one hand. So with the use of API, host-to-host channels, but also Gen AI to power those customers' experience. But they will also need a high-touch, high-care servicing model. So we're talking a lot about technology, a lot about Gen AI, automation, etc. But people will still remain a key focus when it comes to servicing. So just in a nutshell, if we think about operating model for SMEs and corporates, they will vary due to the complexity and the scale of the activity. But ultimately, what remains the same is the end customer expectations across immediacy, ease of experience, ease of access of service. And to stay ahead of heightened competitions, they need to bring automation to a varying degree within their end-to-end process to answer to their end-to-end customer expectations. Banking partners have a key mission to play there in ensuring that their product offering and the servicings are continuously invested in to support their clients match their challenge.
So interesting, two different perspectives from customer expectation, but one on instant side for younger companies and a high degree of automation and host-to-host for larger corporates and a high-touch model. Very interesting. Again, and commented on AI is my next question. Lasma goes to you. Where do you see AI and automation play a role in transforming, the transaction banking workflows, especially given that you looked at the product function at Barclays, which is, somebody said earlier, it takes a month to open the relationship, and then transactions are equally complex. So if you can just put your imagination on how do you see this next 5 years and tell us how AI and automation can help.
Thank you very much for having me. And yes, after more than a decade with Barclays, I am actually about to start with one of the very original disruptive banks next week. So hopefully you can invite me back again next year and I can share the perspective from Metro Bank's point of view as well. But look, I think AI absolutely can transform transaction banking, but I think the key word here is can. There's no shortage of truly compelling use cases, be it reconciliation, cash flow forecasting, fraud detection. But we have to be honest about the rate of adoption, especially when it comes to SMEs and mid-sized corporates. But even the very large and sophisticated enterprises often aren't where we would assume they are. A very big client of Barclays, a global services company, their group treasurer shared with us very openly that they wouldn't ever be open to using a cash flow forecasting tool that they hadn't built themselves and weren't in complete control of every data input and every bit of logic in that tool. Equally, a European FinTech client have been mentioned a few times today and are well known for their sleek products. Were sending us manually extracted Excel spreadsheets with transaction data. So that's the reality behind the scenes. And some of it is due to technological capabilities, some of it is other internal capabilities, some of it is trust, but frankly, it's also bandwidth. These businesses are a few of those super cycles behind because they're having to run their businesses in an increasingly challenging and increasingly unforgiving environment. So it's not their priority to adopt the next cool AI solution or technology. So the potential is large, but I think the adoption has been and will continue to be slow. And really that's where technology companies and banks have a very critical role to play. First of all, they need to solve or work with these clients at their pace. They need to offer modular solutions or modular products that solve real world problems for these clients. Secondly, they need to embed AI behind the scenes, so it's smarter, faster, safer solutions where clients don't have to directly interact with the technology. And there are great examples of that already, right? I mean, we're seeing machine learning pre-validating cross-border payment formats. We're seeing liquidity insights surfaced to relationship managers on kind of the basis of the real-time behavior of the client. And in terms of automating exceptions management, so fantastic use cases. And from clients' perspective, all they need to see is that something works better. And really, it's not just about the CX, right? I mean, it's also the internal benefits for the banks there. And then thirdly, the banks need to be really on top of the unintended or maybe expected pitfalls of adopting some of these tools on behalf of their clients, be it losing that human nuance in processes, or be it in terms of introducing opaque algorithms in credit and trade models, or indeed just having internal teams rely on tools that they don't fully understand themselves. And finally, I think we need to remember that transaction banking is highly interconnected. So it's a bit like installing a smart thermostat in a house where not every room is connected to central heating. You can have a really beautifully designed widget that you can control remotely, you can set up very intricate schedules, but still end up being freezingly cold, right? And it's a bit like that with AI and transaction banking. You can automate onboarding, you can introduce fraud tools, and very sophisticated liquidity optimization tools, but if somewhere down the line you have a batch run, or you have a manual check, or inconsistent data flows, the full potential would just not be materialized, right? And so in this space, with 99% done, you can still feel a lot closer to 1% than 100%. And so it's going to be a balance for banks and technology providers to look out for these truly impactful use cases, deliver them in a very meaningful but not always visible way, and making sure that all of the elements of that value chain are equally future ready.
Lasma, that's very experienced advice and a real market view of AI and what exactly AI will mean to corporate banks. And again, the use cases which you highlighted makes all the difference. So if you're a tech firm or a bank, just look at the use case and how you're going to solve that corporate problem rather than just using AI for the sake of AI. Very, very interesting perspective. So moving to Dom, you heard earlier panel, you heard Clearbank talk about infrastructure and the payments and ecosystem. So my question goes to you, with changing standards and evolving global payments, where Swift came with GPI, there was great success. ISO 20022 coming this year as a mandatory for first set of standards for 101, 202 messages. How do you see this influencing the transaction banking ecosystem?
Yeah, good morning, and first of all, thank you for inviting me, and it's a pleasure also to have all of you here. I think that this one is going to be a very interesting question if I think about my two hats. So what I'm doing with Bank of England in the standard advisory panel here in the UK, but also as a president of the Single African Payment Architecture, that is similar to what is happening in SAPA. And I'd like to remind all of us that in the reality, SAPA is the first cross-border payments that has been delivered in the last maybe 30 years. And it took 30 years to take off. I mean, at the time I was working in the bank, and I still remember how many nights I spent trying to understand how it worked. And so, to answer this question, I think that we should go to the G20 and all the readies that are happening in terms of interoperability of the cross-border payments, because finally it's important that there is someone that finally at the government side is thinking that we needed to facilitate business, so the use case that has been mentioned so far. So need, of course, the payment infrastructure, the liquidity infrastructure to work. So we're talking about the import, export, and so on. So the idea to adopt SEPA in Africa as a SAPA, together with the RTGS system hubs, and the A10, so A10 is the first 10 economy in Africa that report into the G20, is based on the fact that interoperability is important to help the country evolving in what very simple use cases, but like insurance, gold, oil, coal, agriculture, all things that, to be honest, are not really working. And then, when we talk about interoperability, it's also API. It's not only ISO 20022. And then there is another point that is what, Charles, you mentioned from your 30 seconds, the digital money. So why is important? It's something that I would like to add, thinking about my experience in the central bank. All the digital money, okay, are happening, but the point is, are happening outside of the central money jurisdiction. So it means that the country doesn't have the control of the flow. So it's difficult to make a proper plan on the way the economy should change or improve if you don't have the flow of the money. So digital money are really welcome, but the clearing and the settlement should be there. And I think that this one is a good question before the break to think about. There are several fragmented digital money solutions all over the world. We have a digital euro that is taking place, some experiments here in the UK. And another funny thing that happened, 1 month ago, I was attending in Paris a central bank event for central bank. And a nice guy from the Federal Reserve announced a huge project on the digital money at the Federal Reserve. 2 days after, the Vice President of the United States said there is no room for digital money. So it means that it's a political issue. It means that if governments don't sit together and decide that it's a huge investment for all of us as a FinTech or a bank, we decide to do something together. Digital money is still working the way you mentioned before and that we know. So no cross-border, no orchestration, no interoperability, and of course, it's going to be very expensive because everyone is building its own project, but again, it's not going through the G20 direction. That is where we should go.
Interesting, Dom. So 2 dimensions again coming from you. One is digital money and how it will change, but more importantly, the standards and how SWIFT and some of the other aspects will change. Now coming to more operational technology outlook, and my next question is to you. You heard earlier in the day, real-time, faster payments, real-time data. You spoke about client expectations on SME and corporates. Now when you link both and say, hey, I have real-time data, how do you think the client servicing will change and product design should change from a transaction banking?
Yeah, thank you. So I think, as previously mentioned, immediacy in payments is really here to stay as part of the end customer expectations. And we have seen that across the board through the adoptions of APIs as well as instant payments. So in the UK, open banking adoption has surged by 10% over the 10 times over the last 5 years, and there is a penetration around SMEs of 16%, and it's increasing. In Europe, we mentioned the mandatory adoption of SAPA instant this year by Eurozone clearers. And that means that payments will need to be credited within 10 seconds of having been initiated. And that means also banks need to offer instant verification of payments free of charge. Around cross-borders in Asia, Project Nexus, with the cross-border instant payment initiative led by the Bank of International Settlement, will end this year. And again, it's paving the way for further adoptions. Interoperability will be a key element of it across the board. So with the pace of innovation across instant payments, there is a huge opportunity for SMEs and corporates to really fulfill their expectation from their end clients around immediacy and instant payments generally. It also opens the way of improving potentially the liquidity and also counterparty risk. So when it comes to how banks respond to this, to support the change in payment landscapes, banks really have to reimagine the way they design products and the way they bring services to clients, while finding new avenues of growth to foot the cost that is associated with bringing instant payment infrastructure. So this is something that they need to balance. From a propositional perspective, I think David, you mentioned super banks apps, and I think this is definitely the way forward for banks in order to really find these new avenues of growth I mentioned previously. By harnessing the power of the cloud infrastructure, real-time data, and agentic AI, they are really in a position of creating those commercially viable proposition that supports clients not only on one vertical in one product, but across embedded products. And this is where I see banks really having a potential impact. This will need to be done really with GDPR in mind, obviously, as everything that comes with data. Instant payments come with their own challenges when it comes to fraud, financial crime, transaction monitoring. And again, banks will need to think about how they embed the instantaneity while managing those risks and also enhancing their customer servicing to reply to an instant demand. And upskilling of servicing teams is going to be key. We talked about culture earlier, we talked about education. So when I mentioned earlier, corporates with their more complex needs need high touch, high care model, that's including people servicing them. So this workforce will need to be upskilled. So building real-time controls by leveraging APIs, agentic APIs is going to be key for banks and upskilling teams as well, in a nutshell. So real-time data, I see, is a catalyst for banks to reimagine
So
their whole
clearly,
product suite.
you spoke expectation of instant, but when it makes doing about using the real-time data, as you can hear, it's all about reimagining and reimagining service delivery, reimagining product designs, and reimagining the controls and the fraud protection. So the three areas completely agree. My next question goes to Lasma. Lasma, Barclays have been investing as one of the early billions of dollars into fintechs. There is no better person to ask you that how a fintech can help a leader like Barclays in transaction banking.
It's a great question, and I won't answer specifically for Barclays. Look, and I think panel before us very elegantly already tried describing the tension between the traditional banks and the fintechs. I think, in my view, their fintechs are absolutely continuing to move towards the center of this ecosystem from the peripheries, and they're doing that by successfully delivering on three roles, really. They're absolutely accelerating innovation in areas where banks traditionally have been slower or held back by legacy infrastructure and risk frameworks. They're absolutely plugging in specific capability gaps as we see banks move away from building everything in-house and instead assembling the best possible stacks. Fintechs have a very important role to play in filling specific capability gaps there. And absolutely, fintechs have been raising the bar on CX, right? They've redefined what good looks like in terms of speed, transparency, client experience, and banks are now under a huge amount of pressure to live up to that. Having said that, I think there's still temptation, inclination to treat fintech activities at an arm's length. Set up a separate brand, separate app, have a separate office, and that all creates good buzz and is all positive, but it means that the core client base doesn't benefit from the operation. Their operational pain points don't really get solved. I hope HSBC colleagues in this room won't mind me using Zing as an example. Obviously, their cross-border payments app, beautifully built, fast, clearly built for digital-first users, but completely separate from their business banking platform. So as a client of HSBC, who trusts their day-to-day banking to HSBC, they wouldn't have been benefiting from all of this innovation and improvements. And in some ways, actually, it was adding to the fragmentation and the complexity of that estate. So I think integration isn't the same as collaboration, and we're still seeing more collaboration than integration, and we need to see more real, meaningful, accountable partnerships where the complexity and the volume sit. Until then, I think it's interesting, but not maybe essential. Until then, I think it's innovation and not really transformation.
So it's a very different perspective on ecosystems, that accountable partnerships, yeah? And bringing a solution which is more integrated rather than just doing created one of the apps. Now you've been hearing, you spoke about interoperability, you know the kind of stack banks run from transaction banking is a heterogeneous stack, a separate payment, a separate trade, a supply chain. In these situations, when we ingest real-time data, what kind of smarter data flows, or what can one do, given the payment standards insist on a much richer data as it comes? What's your advice to the banks to embed in the data flows?
Yeah, thank you. I will try to be concise because I know that it's coffee time almost now. Maybe there. So I think you mentioned that in Europe the rule of the 10 second for end-to-end transaction is coming into force. I'd like to say that coming from a recent event, that banks are positioning in 4 seconds end-to-end transaction, but the regulation is like you are saying. Now the point is, if you will think about another indication from the European Union that is saying to every financial institution, listen, you need to be able to process end-to-end at least 1,000 transactions per second, I think they say, okay, let's change job, because it's almost impossible. Now, to your point, processing is a big amount of bulk payments in real time, and with the new standard ISO 20022, so extended data, and it's becoming almost impossible. Like Lasma, your former colleague, I say former from Barclays, my friend used to say, Dom, when we have a problem in the real-time payment world, it's already happened. So we need to do something before, so monitoring. Also, payments is one thing, but payments is happen if and when I have control of the liquidity. It means that in the real time it's difficult to have a forecast, so the treasury is a nightmare. And we know that in October it will be mandatory in Europe the outbound transaction, so opening the tab and letting my clients, if I'm a financial institution, to send payments, bank holiday, weekend, night time, what's happening with the liquidity. And what's happened, so you can't tell your treasury, or you can allocate the liquidity in the technical settlement account, because for a treasury perspective, that money needs to be invested, so you can't leave a line without any remuneration. And then there is another point. Recently I've been invited to a forum from Scotland Yard on fraud, so we are talking about big amount of data, and there were a tier 1 bank. They showcase a case study on the way they are working on detecting fraud. And it was amazing the way they were going to the bank account of the client. But then someone from the audience raised a very good question. Asked the nice lady that was presenting the case study, how long it takes to do this? I said, oh, she was fraud, 1 week. Now, 1 week for one case. So it's not possible. This is why frauds are increasing, and this is the reason why. So the point, and I finish, is this one is a game where all the players need to be at the same level. And we know that in the previous panel they explained very well the role of the bank and the FinTech. So what needs to be done is thinking to be updated with any regulation that is coming into force, thinking about the speed of everything that is changing. So of course we welcome services in the cloud like PaaS, SaaS, but not deploying their own technology at home, where there is a huge investment. It is almost impossible to keep going with all innovation that is happening.
So Dom's advice is clearly monitor before it happens and do it smartly. So looking forward, when we're reimagining, it's a rapid fire, just 30 seconds with all of you, and same question. What is one biggest differentiator for banks in the UK for offering transaction banking in the next decade?
Shall I start? Yeah, very less than 30 seconds. I think that what the Deputy Mayor said before, so it's not important what we are building, but for who we are building. And this is what we are doing in the Standard Advisory Panel Bank of England, working with the government, industry, corporates, retails, financial institutions, of course the public administration. Be sure that all money we are investing are going finally to satisfy the needs of the customers.
Customer centricity.
Absolutely.
And
I would really echo that. And if we frame this question in the context of the current geopolitics environment, we still have 4 years of Trump presidency going ahead. So there will be uncertain times. I think a key differentiator for banks remains, so transaction banking still remains a people's business. So the way that banks are going to cement their trusted advisor relationship with clients, deepen client conversation, and product penetration is going to be key.
Lasma?
It's really the the same but in different words. I mean, the bank will reimagine the relationship. The best and the most kind of appropriate for their clients will be the one to win.
So customer centricity and reimagine the relationship. So I'll open it up to the audience for any questions. I think there's a question at the end, if somebody can give the mic. And then one on the right.
Hi, Krishna from Engine. I think you mentioned, Lasma, around partnerships, and I've seen Lloyds as well, particularly in the retail space, explore partnerships like MENA and especially in the hotel booking space recently. What are some of the key domain areas that you think are important for partnerships, especially around the SME segment? Is it, accountancy integrations? What are the kind of customers in the UK looking for? Thanks.
Great question. I think the answer will be you have to find the ecosystems and the partnerships that matter for that particular client segment. Be it real estate companies using real estate management platforms who actually run their portfolio companies on that platform. They'll want their financial services to be plugged in right there. Or be it accountancy platforms you already mentioned, or be it healthcare companies who are managing their again, network or estate of healthcare businesses. So you need to make it specific to the client segment that you're targeting. There isn't one generic answer.
So beyond banking for your segment of customers. Yeah. Marwan, if you can give them.
Hello.
Yeah.
Hi. I think we're focused a lot about the changes, the competition between banking and fintechs, the roles that these players can play in the marketplace. I'm just curious about how will the commercial landscape change? What are your thoughts on today we make money on net interest income, lending, maybe some transaction fees on payments, FX? Is that still the way forward, or do you find the commercial landscape and how we charge and how revenue is generated changing as well?
You can just introduce yourself so we know.
Hi, Sahal Arikpurath. I'm from JP Morgan.
Okay, excellent. Dom, you want to go?
Yeah. So, I'd like to slightly correct you. Instead of saying bank and fintech competition, I say collaboration. And it's going to explain the commercial model is a very good question. Because, the regulator is telling us payments need to be free. So you need to reinvent your business, use cases, and where the new stream from fresh revenues. So in other words, it's added value. That is why I'm stressing the word collaboration, because it's the only way where you can collaborate building new use cases, new commercial model, and finally you can justify an investment on budget, but not based anymore on transaction fee, but on services.
Excellent. Thank you so much, Dom. And I think if there's no further question, I'll put an end to it. Thank you so much for amazing views to the panelists.